hypothesis, is it the more frequent you DCA, the higher the return?
Yes, that is the key thing. But just a disclaimer, we are using past data, and so it's not really conclusive of the future. I just wanted to let's talk about a strategy that a lot of people have been talking about, which is dollar cost averaging. Some of you guys shared that you guys use DCA on ETFs, stocks, insurance products, as well as others. Before we move on to talk about what I found or what I went to research on, actually the biggest underlying DCA that everyone probably have some form of connection with is actually insurance products. I think this is a known fact that every month, let's say your savings endowment plans, right, requires you to put in, let's say, $400, $500. And then what do? They just straight away convert it into certain percentage of those weightage. I actually think that they are quite a good way for people who have no knowledge to grow their wealth. Firstly, it forces them to do it on a regular basis. Every month you have to put in, or every year you have to put in this amount. You don't put in, you surrender, you get back less. I'll get back zero at the starting, right? Yeah, for the first 2 years. So I think that was a good idea. Now thinking back again, why a lot of people didn't succeed in investing is because when they try to do it themselves, the biggest question comes back to consistency. Because I'm busy with work lah, they come up with a lot of reasons. I need to take care of a baby lah, like Eric now need to take care of a baby, cannot do already lah. Luckily he already set up his auto investing already. Now that I experience stock picking and also hear more about DCA, ETFs, all this stuff, it shifted my focus into a big portion of things should be still DCA. The reason being because I don't have a lot of bandwidth, especially when we all are busy with our lives, we've got better things we want to do, right? Yeah, and end of the day, it comes back to not being disciplined, right? And if you can force your money to be flow into certain asset classes on its own without your need for clicking certain buttons, right, it definitely can help with the growth of your wealth lah. If you have that knowledge to know how to pick your own stuff and then pick your own ETFs, then maybe buying a linked product might not be the best use, as we have talked about it in, I think, a few weeks ago, where I actually created the ETF calculator that factors in your expense ratio. But I think people always forgot about this expense ratio, right? So that is where, by including your expense ratio, which tells you how much percentage you are giving back to the funds or let's say your providers, right? The actual real returns or the rates you're getting at, that's the actual one that you should be focusing on, right? Anyways, like the reason why I decided to talk about this or dive into this a little bit, which is very practical, very useful for everyone, as agreed upon, right? DCA works, but a lot of people have been focusing on just buy S&P 500, follow what Warren Buffett mentioned, and you won't go wrong, right? But it's all US. You will never hear people talk about DCA into a STI or your what's Malaysia's one? Okay, but anyways, we don't hear about this. We only hear about the US market. We don't talk about other DCA. And what's the reason? I want to find out whether if we were to do in non-US, does this strategy work? Right? And the second thing is, how often should I DCA? So for Arina, yourself, when you do DCA, right, how often or what's your frequency like?
Once a month.
Once a month. But anyways, like, is there any reason why you chose 30 days instead of 15 days, 2 months?
Because in Malaysia, Singapore, our salary is monthly.
Okay.
If you are in, I think, other country like Europe or it's weekly, right? So maybe it's more suitable to, you can DCA weekly.
I see. Once the pay come in, you also can do it like daily, weekly also. Why not do those?
But why though?
Yeah, just wondering. For convenience.
I think I'd rather a big amount than doing it small.
I
Does
see.
it make a difference? Is there a calculator for measuring?
Just want to ask from everyone here, what's the frequency you guys do for your DCA? And is there any particular reason why? Or is it because people say do once a month, then I do once a month? Share with me in the comments right now. I went to compare what's the frequency. So I compared between like once a month, which is what usually people do, and do it. And then the other one is paid every single day, daily. And the reason why I thought about this was that anyways, the platform that you use always opens up to the frequency you can set one. You can set once a month, you can set once a day, 2 weeks, all this stuff. Technically, it doesn't require the user's inputs as well. It's all automated. So I just thought like, what will be the best returns? So let's find out a little bit more. Okay, so this was the inspiration so from Eric when he started his baby funds, right? So he talked about how to use auto investing as a way to grow his kids' cash pile. Right, and you can find it in our WealthPulse recordings under exclusive just to remind everyone who don't know how to use it. Right. So exclusive is where the exclusive videos that for today's sessions is actually being held and stored at lah. I should ask you guys first. Do you think that dollar cost averaging daily or dollar cost averaging monthly is the best? Okay, Zen says daily. Hui Kwang say no difference. Well, maybe Hui Kwang got do this study before. PL says daily. How about the rest?
Hourly can.
Hourly. Wow, hourly like I never tried
It's
before.
like trading.
Yes, yeah.
I heard this theory that I don't know, my friend who is a dealer told me that he saw the portfolio of people who the client across 10 years who trade daily, right, actually lose more than investor who only trade on special event. Yeah.
Interesting.
Yeah.
Oh. But the purpose is different. One is for cash flow, one is to grow lah.
Yeah, I don't know. Then in conclusion, they found out that actually you don't need to trade daily.
I
don't know if they're true or not.
I think I read about this also.
I think
trading comes with a lot of other factors lah. Like what your day trade, your swing trade, then all the other stuff lah. Okay, let's see what are the other comments. Some people say Autobot. Autobot is in the Optimus Prime, is it? Okay, never mind.
It's a bot to trade hourly. Not to trade hourly to DCA.
I see. Some say daily, but must have enough cash to put in. Oh, okay, yeah, true. Monthly, okay. Yeah. Okay, so we have a fair share of people who thinks that is daily. Some of you thinks is monthly.
So the hypothesis is it the more frequent you DCA, the higher the return?
Yes, that is the key. But just a disclaimer, we are using past data, and so it's not really conclusive of the future lah. But just wanted to have a show like what is happening. So the winner is both wins. Why do I say so, right?
Monthly.
No, actually both. Okay, compare daily and monthly, right? I did these two different studies, but I jumped the gun. But anyways, if you pick the day of the month to DCA differently, the one on top is every 6th of the month I DCA. The one below is every 7th of the month I DCA. It turns out the results are different. So it's a bit like timing already. So it's like money. So at the end of the day, it doesn't really matter much lah. Because you can see that, let's just focus on the SPY, right? The difference is like $200, here is about $100. So then that's bad differences lah. And it also like a bit of like luck involved. If you pick, let's say 8th of the month, then it's like what, then you benefit lah. Then end of the day, the most important takeaway is that no matter what day you choose, your cash pile will definitely be more than if you don't invest. If you understand this, type in the 3 in the chat. If you get that concept, it doesn't matter which day of the month or you do it daily or monthly, right? As long as you DCA, of course, in the right kind of, right, it will go up and much more than what you started off if you just put in the bank at a very low interest. That's the biggest key takeaway. Of course, let's come back to the second part, which is between the Chinese and the US market lah. If you have invested, what is the difference?
Why not 6? Why not 8?
Why not 6? Why not 8? Okay, how about this? We find out together right now, live. Okay, so I did this, so we compare a lot of stuff. Why not 8, right? Let's find out. 8. Real time change. Why no change? Wow, this one like real market. Okay, so on the 8th, right? If you do it on the 8th of every month, daily still win. No, what's daily? Oh, monthly will win. Monthly will win.
I do on first, so what happened?
Oh, let's find out. Okay, last one. If not, we'll do this for every day. This one.
I didn't know. I do monthly.
Anyways, on
if you do on first, I will only get 4K.
Yeah, if you do it on the first, you'll get only like 5K.
No.
But good return 194%.
I changed my day now.
Oh.
Okay, right.
This is on hindsight. This is on hindsight. I don't say later you go and change.
Like going feng shui must.
Okay. Yeah, it's very hard to say.
Okay,
last one. Okay, last one. This is not like some horse racing competition. But quite cool, right? To see the whole thing change. It changed already, right?
Even worse,
Yeah.
Okay, so don't do it end of the month.
Don't do it at the end of the month. I think that's the.
Don't do it at the beginning of the month. What about 15? Some people say like mid of the month.
Wait. I just want to check. Do you guys want to see the everyday one? If you want to see the everyday one, type in like yes in the chat. Then I go and do it and populate for everyone later on. If not, this whole session will be just talking about
Yes.
1 to 15.
50. Because some people salary on the mid of the month.
Oh, is it? Oh, okay.
Oi.
Oh, actually better leh. Okay,
Send me
okay.
of the month,
Everybody do 15 on the.
Don't do end of the month and first of the month. I just knew.
Okay. Yeah, but I think end of the day is like it's still like more than 100%, which is over 10 years, and we are just talking about a very meager daily investment
On the
of $1.
how 31st? No 31st. Hey, what will happen if the day missing?
Oh, actually, let's compute also. Okay, but anyways, the main other idea is that this is just based on a $30 monthly cash flow, or DCA, right? Imagine this $30 is $300. We are talking about a bigger sum, and all the difference is there lah. Can somebody give me a number that you are roughly saving every day? Then we just have a look together. What kind of returns? 18. Okay, 18 a day is like $500 a month.
Quite high. To DCA.
I think it's quite doable also lah. We just need to manage our expenses. Coming back to the slides, you just need to follow with one strategy, and that is to DCA. The frequency don't really make a big difference, but it's definitely a bigger difference than you don't invest, than you put in a bank, timing the market or this. I'm not saying that timing market is bad, it's just that one requires more energy, more monitoring. For the average Joes out there that don't really like to focus on looking at charts or looking quarterly is still doable, but if not, right, that's why WealthPulse is here with you to do for you, and then we analyze together. We come back every once a week, just 1 hour to monitor markets like this. Thank you so much for watching to this video, and I hope that you have enjoyed and learned something from this segment of our weekly WealthPulse sharing. We conduct our WealthPulse every Tuesdays 8 to 9 PM as we deep dive into the latest and biggest market news and what this means to investors. Do remember to like, subscribe, and also share with more of your friends to support us in making investing easy for everyone to follow. Join us in our community through WealthPulse, and I have placed the link in the description box below. I will see you online then. Bye bye.